is called Ask the VC. I'm hoping that quite a few VCs are here, but more importantly, I'm hoping that lots of startups are here. You see, this happened because of two reasons. I'm not going to be bothered about the second reason. We just got this 1 hour slot because we had to move something else. But then at the same time, we had lots of startups asking lots of questions to VCs, to us. And I said, I'm not a VC. I wish I were one. I'm just a poor little consultant. So then we thought, why don't we bunch all these questions together, use this 45 minutes or so, and finally, maybe get the dream of the startups come true. They want to ask questions to the VCs. Who are these fellows to keep asking questions to me all the time? Yeah, we have about 10 questions. I hope we have time for that. Well, this is for any investor in the audience, but I thought it will be good if we can have some guys sitting here as well, so the whole thing has a bit more glamour. Let me invite to the stage some of the brave VC folks who said, yes, I'm willing to sit on stage and answer the questions. Most others said, no, we'll be in the audience, we'll try to, I had to get clearance, protocols. Okay, you guys can be seated wherever you are, try to answer whatever questions you want. The brave souls, Jyotsna, each of you guys, since you are brave enough, I'm going to give you a minute to introduce yourself as well. Hiran, Chandran, and well, I don't know if, P.S. Kumar, are you here? Oh, you were the first one to volunteer. So, and I don't know if the last person is in. He said, if I'm in, I'll come in. Please tell me where to come. Mr. Rajiv Kumar, your place is here. If you are coming, Rajiv Kumar, are you here? Oh, yeah, you can be seated there. Okay, if he joins, I think there are 4 who have volunteered. If Raja joins, there will be 1 more. I think 4 chairs are there, right? But that's fine. Why don't you guys be seated there? Look, this is an experimental session. The whole event seems to be an experimental event, so I'm hoping the whole thing runs well. Well, we got a lot of questions, and obviously we had to curate some because there are some questions which are best asked face to face. Yeah, it's good for the startup, it's good for the investor. But we felt at the same time we didn't want to make it very politically correct, so correct that it's just boring. Yeah. So I think what we have selected finally is a list of about 10, 12 questions. I think there are a couple of questions in this which are provocative. Provocative in a very positive sense, not where you get into fights and things like that, even though we wouldn't mind you guys getting onto some violent fights. There should be some drama after all. Yeah. Okay, let's start it off. I hope there are enough investors here, and I hope there are enough startups. Oh, there is Rajiv Kumar calling. Why don't I just ask him to come up? Hello, Raja. Chair for him as well. All right, we'll start while he joins us. We have maybe about 45 minutes. How many investors are there in the audience? Are there enough investors? 1. I don't know where the investors are. I thought the whole place was full of. We'll do this. There are supposed to be at least 30, 40 investors today. They're all probably hanging out. I asked them to come in. Anyway, check it out. Okay, I have 10. Let me prioritize. I don't know if you have time for 10. This question is very relevant for early stage, very early stage rather, and the question is, how do you get a valuation for very early stage startups, right? Once they reach a certain stage, numbers start appearing here and there, but mic doesn't work.
Yeah, we'll do that first.
Yes, I'm sorry. I will give you the privilege because you guys volunteered. A minute each of you. Chandran, why don't you manage it? You are the boss.
Okay, Jyotsna, you go in first.
All right. Really excited to be here, and thanks, Narsi, for springing this surprise. I am Jyotsna. I'm a partner with Aureolus Ventures. I an engineering background. I also had a early .com start. I helped write one of the world's earliest online payment systems, and that company went public. And then I did my MBA at Stanford. I worked in Silicon Valley, and then came back to India. I had a health food company that I sold, and then one of my investors, who is Paula Mariwala of Aureolus, she invited me to join her as an investor. So I am an entrepreneur turned investor, so I've been in your shoes. We invest in health, climate, and deep tech. So climate was something which wasn't really on my radar, but the more I spend time on it, the more inspired and the more optimistic I feel. And of course, coming to events like this is absolutely fantastic. So that's a little bit about me.
Thank you, Jyotsna. And you can go on next, Kumar.
Good afternoon, everybody. I am Dr. P.S. Kumar. I did BE Mechanical, ME Production, MBA in Marketing, and PhD in Business Administration. I worked with Larsen & Toubro for a long time, and later I moved to CNH, that's a Fiat Industrial Group, and was in Bombay, throughout India, and came back and started my own company some 5 years before. We are into high-end automation. We call it Industry 4.0, Industry 5.0. And we are an advisor for many big companies or many startups who want to venture into business and convincing people, especially for the people who want to do export potential. That means there's a huge market is available. So we are helping them, and we are helping them to get into the international competitiveness. That's it. Thank you.
Thank you very much. You want to go next on stage?
Yeah, I could do that. Hello. Hi. Good afternoon. My name is Rajiv Kumar. I'm Raja Rajiv Kumar. I had a boutique investment bank called Lakshmi Ramavarma Capital Advisors. We run a private equity fund out of Hong Kong and Dubai. And I started as an entrepreneur way back in '97 when we only had serious people getting into entrepreneurship with serious ideas, people who knew what they're doing. And then I started, I exited in I sold some of my products in 99, 2000, started mentoring startups and also as an angel investor in 2000. Visiting various IITs and IIMs as a visiting faculty then. I'm involved with IIT startups as a mentor and coach. We run accelerator programs in USA and India, where at least one of the co-founders should be from an IIT, sector agnostic. I got attracted to clean, what we used to call it GSO, Global Sustainability Options. We had a movement which brought together some very interesting people, where we started looking at research, innovation, but new applications of old innovations, old products. We invested heavily into research. Most of my investments have been around developing products, research initiatives, and some of the finest research teams in the West as well as the East. So I want to thank you for inviting me here, Narsi and others. It's a pleasure to meet some fine minds. In 2007, we launched Prithvi Sustainability and Innovation Fund, which was focusing on sustainability options that we call. So sustainability options is not just clean technology and all that, but we also look at how that can lead to sustainable development. We believe that even social entrepreneurs and social ventures need to make money for investors and the society. So we focus on building value for the society, for the stakeholders, rather than just a valuation. I am very keen to learn from you all. Thank you for having me here again. And I apologize for coming late because I got held up due to a couple of accidents on the road. Thank you very much.
Thank you, Rajiv. So myself, I'm an alumni of IIT Madras, went to IIM Calcutta. Long corporate career, worked in companies like HCL Tech, CK Birla Group, Hinduja Group and Rane Group. Headed businesses in UK, Europe, US. Scaled businesses as a corporate entrepreneur. But 5 years back, I came into the startup ecosystem. I was the CEO of Chennai Angels for about 3 years. Part of 50 investments during my time. And briefly headed the Shivnadar Incubation Foundation at SSN College. Last 1 year, I have been running my own network, Campus Angels Network. We are a 125-member team now, and we invest in deep tech startups. We work with campuses We work with incubation centers which are doing deep tech work. That is my background, and we fund startups at a very early stage. Those which have got product validation, who are just got early paying customers and they want to go into market. So we funded the go-to-market stage. So that is about me, and now I think we can take questions from you.
All right. I am told rather, that we have about 25 minutes, which is enough time to answer 5 or 6 questions well, and I can read out the rest of the questions. You guys can probably discuss them off stage. The first question I found was very relevant because this is something many of you guys asked, early stage. So assuming you guys like us, what we do, and we guys also like you, how do you value us at a very early stage? I mean, many things are uncertain, especially if it's deep tech. So I leave it to who wants to discuss answer based on what you guys have done, but how do you do this?
Can I?
And again, one request, since there are 4 of you, all of you may want to answer, keep your answers short so that the rest of you guys can discuss off stage. Some of the questions asked are actually asked by guys sitting here. I don't know who asked what, but so if you can answer it short, they may want to get a longer version later.
Thank you, Nasi. Valuation of the project. Like if you are doing a proposal, the main thing what I feel is there are 3 components. One is the strategy formation, which all people like us, all technical guys, we know very well how create a strategy for a business. We'll do it. Then strategy planning. Of course, 50% of the people who have created a good strategy will also plan a proper strategy planning. But main thing, the problem comes up to is execution of the strategy, what you have planned up. There are many people, almost 90% of startups fails because of that. They didn't have the proper execution. For which, what is the business first most important requirement is people, you must be knowing about business model canvas. That's a basic model which all the people will be knowing about it. But that will not interest the VC. That is giving you overall picture. You need to get into X matrix. That's what detailed planning, where you are creating a milestone, telling what is the quantity you are going to achieve, and in terms of financial things, material things, everything you planned up, and you plan the worst situation and prepare the answer for that. If you go with that, you can able to convince people. Next, please.
So the valuation actually, when you start at idea stage, it's just idea, right? You have to validate, you have to find out whether there is a need for what you are trying to solve. You have to talk to some 100 customers, prospective customers for whom you think you are solving the problem. So typically you have to, it's bootstrapped, so you have to fund yourself. And there's no valuation at the germination stage. I mean, I call it the germination stage. And once you have a validated idea and now ready to build something, we have found a problem which has to be solved, which is very acute. There are many things to address. Then once you have got idea validation done and you are now ready to build the product, typically your valuation is about 1 crore, 1-2 crores. And you need some money to do the product validation. Typically product validation, you need 10, 15, 20 lakhs. If it is deep tech, you need more. And you normally get funded by government schemes today. You have Department of Science and Technology, MeitY, DBT, and other ministries who are actually supporting startups with grants and seed funds. Even Startup India seed fund is there. At that stage, when you are now building your product, typically your valuation is about 5 to 10 crores. That is depending on to what extent you have actually moved on. Once you got a validated product where you got early paying customers or willing to buy your product, the first version of your product, I think you have reached a valuation of about 10 crores. I mean, this is all fancy because at 10 crore valuation, you got a product validation, you want to go to market, typically you have to need at least 1 crore to go to the next stage. Building that initial team, going to the market, doing some promotion. So you need about 1 crore, crore and a half. So every stage when you take money, you look at not diluting more than 10%. So it's a little fancy kind of a figure. So between 10 and 15 crore is the valuation when you are going to market. And once you have gone to market, you got 12 to 24 months of revenue, and now you are ready to grow to the next level. That stage when you come, it's normally, we call it pre-series A, and the valuations or anywhere 25 crore upwards. So this is the stage. Then after that, I think it will. So, but every time when you take money for the next 18 months, and whatever money you take, you try to see that you don't dilute more than 10 to 12%. And this is how it works at the early stages.
So before the other two answer, I think the question I must have done a better job. My apologies. I think the question is more focused. Even though I think both these answers are relevant, the question was more like, look, I think, by the way, that guy actually gave me a legendary story where the founders of Google, Page and Brin, went to Yahoo apparently, and they said, look, we want to sell our company for $1 million. And at least the Silicon Valley legend says these guys said, I don't want to buy you.
Yeah.
Right? $1 million is too much for a bloody search engine.
Yeah.
And I mean, I don't know how much of this myth is true. I think the question they have is, see, some of these very early stage products are almost impossible to be evaluated about the eventual potential.
Yeah.
Right? And
I
if
mean-
Yahoo had indeed done it, those guys must be kicking themselves every day, right?
I was,
that was the
yeah,
context.
I was broadly at Yahoo at that time. So, I mean, to answer your question, it is very hard to value a company at a very early stage. I think in some cases, you might as well not do that exercise, just kick it down the road. So now there are a bunch of instruments like safe notes and convertible notes. So don't spend a lot of your time thinking, what's my valuation and all of that stuff. That's the least of your problems. The least, you should be building a prototype, getting customers, and getting early revenues. Many early stage incubators, they have a standard format. They're like, I'll give you this much money for this much equity. That's a great place to start. So don't spend much of your time on your actual, what is the actual nickel and dime? Is it this much or that much? It's very hard to tell. At later stage, VCs will value it on a bunch of different things, including not necessarily your performance alone, but how the market is doing, what have been the valuations of other companies, things which are not actually in your control. And that time comes when you have certain metrics that you can use for valuation. So until you have those metrics, just focus on your product, your customer, your go-to-market, all of those things, and leave the valuation for a later stage. In terms of, Yahoo's not great, acquisition and sales strategy, yeah, I mean, I think that is what you can call, you could say, hubris to some extent, right? Because it was very clear that Google was doing very well. There was no monetization strategy. That came a little bit later by copying a company called Overture that ironically Yahoo had bought. So I was basically there at Yahoo when Google was not yet number one. And I think that this is why founders need to be with the company. I think for me that's the major thing, the founders with the company. It really happened. Yeah, it really happened. But yeah, I mean, that's a different story. But yeah, valuation is very difficult. Google at that time had no revenues, not even a revenue model. So, well, take from that what you will.
So I would take a different way. I agree with what my colleagues say, and it's very rare to hear this kind of comments which I agree with on a panel, because normally people have different comments, different opinion. There are a lot of very good investors who don't talk to you about valuation. They look at the value that you're going to add to we're talking about impact investment, we're talking about climate change related, it's all impact, right? So we look at what is this thing going to, how is it going to impact the society, the earth, the world, our health, ourselves in the next 10 years, 20 years. How is it going to go, right? We look at, as my colleague here said, we look at the capability of the founders to execute. Now, most of the products that comes out, most of the services that come out are not really unique, because ideas are dime a dozen, or score a dozen, you can say. Dime a score, you can say. It's not rare. Almost a lot of people have the similar ideas, but how are you going to execute it? What is your prime focus? And one person here, I mean, it's very rare to listen that somebody talking about a business plan. If someone comes to me with a pitch deck, I say, thank you very much. Many times I don't even reply to that. I don't accept pitch decks. Unless somebody has a proper business plan, I don't talk to them. Because only when you write a business plan, will you understand the whole, have a 360-degree, understanding of the venture that you're getting into. That is very important, and execution is important. Valuation comes later on, because the early investors don't look at the value. They look at how are you going to execute, how are you going to grow, and what are you going to be, or where are you going to be in 5 to 10 years. That's when the valuation comes in, right? Don't focus on valuation. Focus on executing, reaching your goals, executing your project, and try to create value for the society, for Earth. Focus on that, okay? Money is important, but what you're doing is more important than the money that comes in. Thank you.
I think it's the Shark Tank effect. Huh? Everybody wants to talk about valuation, even when they have a, even when they.
No, I just
have
want
an
to
idea.
add one point here. I did start talking about numbers because I've done a lot of deals in that area. So I jumped into the number, but I think what Jyotsna said, I think I agree. A lot of deals, what happens is you leave the valuation to the next rounds. So do it through safe notes or do it through convertibles. There also there will be a post valuation, or there's a floor and cap, etc. But that is more flexible. So, and many startups are actually getting valued in these kind of structures.
And one more small request. Please don't follow the success stories of Yahoo and Google and all. That's for a later stage, right? Everyone, it's good to talk about everyone become billionaires. But at the end of the day, you need to start off to become a billionaire. Right? Yahoo
I
and all-
agree with him that detailed planning, business plan, if you tech product, some new product, one of a time people may agree. But product which is going to be sustainable, people want to have in detailed plan. That means you want to know how you are going to achieve the milestone, pessimistic, optimistic, realistic, on what is the cash flow, how you are going to ensure that, how you are going to pay back, what is the profit you are going to ensure. All these things needs to be there, and how you are going to review it. That means, like what he told, all 360 degree, your business, you need to have a plan. Without the detailed plan, it's very difficult, and people will not get convinced, in my point.
Thank you. I think given the way you guys are answering, it's very good. Even though I probably thought you guys will have shorter answers, but I think this format is more valuable. We probably have one question, and after that, I'm sure you guys have more. You can catch them outside. So rather than ask one question, I think there are 2 or 3 questions which follow a similar pattern, and all these are anchored around, look, as investors in a very early stage firm, what more beyond money can you bring to us? And as I said, there are out of 10 questions, 3 of them have a variation of this. So one of them has asked, look, can you also help us find co-founders? We are good in something, but we probably aren't good in something else. There's another which asks, look, marketing is not our core strength, and I think that is coming out in many of the pitches that we are seeing here as well. Can you help us in marketing, or at least telling us something about marketing? We don't even know how to talk to an audience. Yeah, can you do something? And third is also sometimes some guys feel in deep tech especially, they feel, look, the solution by themselves will not be able to sell in the market. But if it's partnered with something else, together it can sell. But where is that solution provider? How we do it? So my question to you guys is just rolling all these into one. I don't know how your ecosystem works, the funding at a very early stage. Oh yeah, so the last question related to this was, so do you think a venture studio is better, where they actually have more skin in the game? They gave me infrastructure, they gave me funding, they gave me mentoring, they gave me a nice office, whatever. So these are all questions that are everything anchored around what more can you provide me beyond funding? And the specific they want could vary from startup to startup.
No, I will take this question first. So when you start your journey, 15, 20 years back, we didn't have all this incubator concept. People used to do it out of their homes and garages. So incubators have come, and incubation is an ecosystem you should definitely adopt. And I have headed an incubator. I'm also on the board of IIM Calcutta Innovation Park. So incubation is very important, where you get all the support you need. You get office space, you get mentoring, you get early stage funding, and you have an ecosystem which will help you. The second stage, when you move on, when you reach the go-to-market, there is where you actually need a lot of support to reach out to customers. You need people who can help you to build a team, etc. So we have got these accelerators which have come, and this is a concept which has picked up now. It's a 3 to 6 month kind of a program. Stanford Seed does it. Stanford Spark does it. You have the GDC, which is there, and IT Madras, which also does it. Yeah, so IT Madras incubation cell, if you take. Yeah, inside the IIT Madras. Yeah, okay. So you have accelerators which you need to go to. Then only you start seeing these angel networks who come, right? Then is when you start seeing us. We start funding, and normally angel networks, there are two types of angel networks. You have this, Chennai angels or Hyderabad angels or campus angels or Mumbai angels. We are a group of angels who, besides supporting you with funds, we also help you in getting business contacts, help you to get your product strategy right, help you to get your team right. We also try to recommend people you can take, etc. And there are networks like IP Ventures or a VCAT, etc., which is more electronic in nature, which they just fund. And they have some centrally they support. But so what you can look for from the angel network is, besides money, definitely there is a group of people who are there to help you in various dimensions you want. And one last thing I want to tell, I think I'm sort of hugging the whole thing. What is very important is the sales aspect of it. I wanted to tell a story, but I think it's very important I say that. I remember about 20 years back, I was a basically I was a back end person. I used to head strategy, I used to head sourcing, I used to do IT and projects, etc. And one fine day, the head of marketing and sales of Mitsubishi, I was in Hindustan Motors at that time, he resigned and left. So I was asked to head it. I was made the chief general manager, marketing and sales. I was quite cushy in doing other jobs, but I was put into this job and it was like fire, The next 2 years, I don't know, you had to had to deliver 1,000 cars of sales every month. So you have to go and 50 dealerships under you. You have to, every day in, day out, you have to liquidate stocks. You have to get the money from the dealers, and you have to do marketing. You have to do launches. Suddenly, the whole life changed, and I realized what sales means. It is important to have a sales mentality. If you don't have somebody in your team who doesn't know sales, who doesn't know how to go to market and get that customers to buy your product, you will be in trouble. So it's important right from day one to ensure that one of your team members is a very, very strong marketing and salesperson. So these are some of my thoughts which I wanted to share.
Adding to what he has said, marketing, if you cannot sell yourself, how you can sell your product or your concept or your idea? So the first and the foremost thing is marketing. People think that it's a low-tech job. It's not like that. Marketing, you are solving somebody's problem. You are going to give you a solution. So you are yesterday onwards, I am attending to many of the things. It is fascinating and interesting to see all the things. 30, 40 years before, when we did engineering, we were not like this. So today you have a huge opportunity. You should know about marketing in detail. Like engineers, we are more of systematic and logistic, mechanical methods, and we follow it. But more creativity is needed. That's the reason people talked about innovations. That's the reason people talk about new technologies coming in. So marketing, you read, marketing 4.0 has come, 5.0 has come, hyper customization. You go to Germany, you see all the product which is becoming successful because of marketing. So that is what he said is very, very important. You need to have marketing expertise within you. Forget about whether you want to have another person or that is different. If you are 2 founders or 3 founders, one must be in marketing. Without marketing, it's very difficult nowadays. It's my opinion.
I'll quickly answer those 5 questions which Nasi had asked. Number 1, in the early stage, never look for a passive investor. Always look for an active investor, for somebody who can give you more than money. But you should be able to understand what you need more than money. Okay, so an investor, you can get introduced to co-founders from by an investor. But more than that, I think if you need co-founders, you should look at peer groups. There are startup events. There are alumni groups, TIE, NASCOM, professional associations. But before you try to onboard a co-founder, create a job description for him, like you employ somebody. Have a proper business plan or a vision document. Talk to him. Have numerous meetings before you take a co-founder. Never just go and jump into that. Never tie a co-founder to an investment, okay? Never take a co-founder and insist that he invests in you. You can also have an additional co-founder who's putting in money, that's fine. But for you, for the core team that drives your business, you need to look at the skill set more than anything. And the team, never be a solo entrepreneur. Always have 3 people with you. One person who understands the product or the client's needs. One person who is a technology guy, perhaps, or an engineer, or a service guy who's responsible for delivery of your service or your product. And number 3, the marketing guy who will take you to the customers. These are 3 very important things. HR guy, research guy, operations guy, finance guy, you can hire. You can have part-time people, consultants for that. So look at, like my colleague said, look at accelerator programs, which will take your idea, validate the idea, take it forward. In a lot of investor community, start working over there. You find mentors there. Have a mentor, have a couple of coaches, have advisors. This you can do yourself. Try to, before you start your work, start your venture, try to validate it. Go meet up with people. Meet with stakeholders, meet with experts. Try to meet customers. And then, evaluate once more and then start your venture. Always look for an active investor who can work with you. What we do is we run incubators and we run accelerator programs. When we do that, we sit down with, when we onboard a candidate into the program, what we do, we sit down with them. We have discussions, we make a gap analysis. Based on that, we get a mentor or coach. We look at how do we get your anchor customer, your first customer, your angel customer. We also look at trying to get you a strategic partner who may also give you an order or invest in you, but becomes your client or helps you with technology, helps you with manufacturing. So a strategic partner first, then go for an investor, right? That will give you a huge impetus. Take your time, first year, second year, take your time before you really ramp up. Get your foundation get your foot on a solid foundation. This is very important, right? Thank you.
That's an excellent question. What value does an investor add to your organization? And I'm going to answer it in both as a former entrepreneur and as an investor. And I'm also on the advisory board of Stanford Seed, so they'll be thrilled to know that they got a shout out here. So one very kind of housekeeping thing is to find a co-founder. There are a bunch of good programs like Entrepreneur First. I've seen a surprisingly number of good companies where the co-founders met through Entrepreneur First. So maybe worth taking a look at that. I think as an entrepreneur, where I found investors added value was by telling me what else is happening. Because as a founder, I was very heads down in my operations, right? And was very focused on what needed to happen that day, that month. But by giving me a broader view of what was happening overall, whether it was good news or bad news, my investors helped me to figure out that I was a piece or a small piece of a larger ecosystem. And sometimes a lot of your fate is decided not necessarily by what you do, but what's happening in the ecosystem overall. So that was one way where they added value. The second thing, they also added value by telling me strategies which worked and failed that in other companies. That doesn't necessarily mean that it's going to work or fail for you, but it just gives you more data points to make decisions. I think, of course, as an investor, I think where we have added value to entrepreneurs is, again, by pulling them out of the operational background. Like sometimes you see a pitch from an entrepreneur trying to raise a Series A. And in fact, the past several months, we've spent an inordinate amount of time helping founders raise their next round. You would see that the pitch is very focused on the numbers, what they've done last time. And sometimes they need to zoom out and tell the story, the big story. of what it is that they're trying to do. The second thing is we've helped them meet investors. We've helped them spot potential in their business and help them to reorient their fundraising strategy around that. We've definitely helped them meet people, in industry who for their sales and so forth. We have not necessarily helped them meet co-founders, although we always constantly making introductions at all times. But we don't necessarily see that as a major value add from our side. In terms of venture studio, a venture studio is a great idea for a business that is going to fail, simply because it takes you the risk. It takes away the risk of starting that business. In the sense, if you suppose you're starting something that needs a lot of capital, then you have a whole bunch of things which are aligned for you, and you just have to execute on the business. Unfortunately, what happens when the business succeeds is that the founder is very much diluted. So the the venture studio has to be making sure that there is a chance for the founder to re-up. Otherwise, you get a cap table, which the founder has got a very small stake in the business, and that is just bad news, like all around. So one of the things that we do as a VC is to make sure that the founder has got enough stake, and we'll raise that question with them, that do you have enough stake for it to succeed? And I'm happy to say that I'm seeing across many very good VCs as well.
And venture studio is a very relatively new thing in India. It's picking up. But like she said, you need to ensure that you don't get diluted too much. Yeah, thanks.
Is it okay if we close? We are just running out of time.
Yeah.
Okay, last word to the
Last word. Yeah. Don't worry about the investors, because the moment about India, how it is China +1, so huge opportunities coming in, plenty of people want to come to India. If you have a good product, good business plan, like my colleagues told, if you have a good business plan, which is convincing anybody, if you go and meet a good people, automatically, even if they are not investor, they will find an investor for you. Like some of our earlier speaker also told, the product is very good. Even if somebody is not investing, we should not allow the product to die. So we should make it happen. So that's the reason I'm saying it. Today, many people in India want to diversify because of the different reasons. So they are looking for an opportunity to go into the new product line. So your products, your services, if it is going to be convincing to those people also, they will get you investors. Thank you.
Thank you. Thank you very much. I'm actually very happy to have this team, even though this was a quickly put together team, very diverse. Paula and Raja probably from a more prominent type of VC fund. The other two from different types. Chandran, as he said, he's actually heading a network. So he's not just a VC, he's heading an angel network. And he has been in that kind of a network role for some time. And we have Kumar coming from a very different background. I think it's good to have this because these diverse insights are important. Now, I have a very complicated role to play. There are lots of things on my thing, so I'm going to do one by one. First is a memento, of course. My pleasure to give a memento to each of these guys. Can you get it, please? I'm sure you guys have a lot of questions. It's going to take 5 minutes, a short series of things. It'll all be interesting, I assure you. And after that, well, they will be available outside. You can talk to them. So Himakshi is the head of the event management team that has put together the entire show. These are the people who do all the hard work, but hardly get any recognition. Yes, but before the Himakshi, what did you say?
So like everything else, this was also unexpected, but thank you so much, Narsi sir. Thank you everybody for being here. And I think we've been working with Energy Consortium for quite some time now, and it was a great opportunity collaborating with EAI team to put this CLIMAFIX together. And kudos to Narsi sir for everything that he's put together and his really young team. Thank you everybody. Thank you.